Good afternoon. This is Clark Neighbors on Friday, July 17th for the market weekly recap. Interesting week. We've seen some pickup in volatility and the markets over the last 2 to 3 weeks due to the weather scenarios. So let's kind of look where we are for the week. Corn roughly down 14 cents, beans down 15, wheat down somewhere around 14 cents for the week. The dollar index has had a nice run here in the last couple of weeks. It's up near 2-month highs back in that 98 region. And at the same point, we've seen pressure on the energy trade as crude has moved itself back towards $50 a barrel. The moving factor of this market, well advertised, is weather and perception of crop conditions, and that perception going forward. Each and every day, the market comes in, determines if the crop is getting smaller or if it's getting larger. And momentum to the upside has been very strong, seems to possibly have waned some this week. As during the week, we tested the 40s. In other words, D's corn in that 440 area that was breached last week seemed to be resistance. And from a technical perspective, once old resistance is reached, then it tends to be new support. The market went above the 440 area, and here with the pressure of the last few days, we've actually went back below the 440 area in the D's corn and closed closer to 430 here for the week. On the soybeans, 1040 was recent highs from a couple weeks ago. We couldn't really take out 1040 on a close. Earlier this week, we tested 1040 again on Monday, peaked through to that 1045 area, and at one point today, November beans actually just breached the $10 area and closed in the low $10 region. So again, from a technical perspective, watch 440, watch 1040 on the beans. Here in the office, we feel the downside is somewhat limited over the next month until we get a better feel what this crop is. Monday afternoon this week, crop conditions came out. Much in the trade we're looking for conditions to be lower. We definitely saw lower conditions in the Eastern Corn Belt, namely Illinois, Indiana, and Ohio. There was slight increases in Nebraska and Minnesota, offsetting at this point the issues in the Eastern Corn Belt. So going forward, the debate will be, can the Western Corn Belt, which some areas of the Western Corn Belt potentially are looking at or near record levels as far as yield in corn, can they offset the issues in the East? And that will be the debate that may linger all the way into harvest. As far as soybeans, that debate may linger longer when you throw in the fact of planted acres with the recounting of acres in Missouri and so on. So that's the main driving force of this market the next 30 days. Supply, supply, supply. On the other side of the coin, demand going forward into the new crop looks a little concerning at this point. Both soybeans and corn from new crop sales as of this date compared to a year ago are way down. Beans are roughly 50% of a year ago. And we're in that time window each year where new crop sales tend to increase dramatically. This upcoming week, when we get export sales next Thursday, a year ago we added 90 million bushels of new crop bean sales. This past week, we added 18 million for this upcoming year. So we got a long ways to go to try to catch up with last year, and with the Chinese stock market having issues with Chinese crush margins at yearly lows, and with the smaller pork population that is talked about in China, and last but not least, cheaper competitive soybeans or soybean products out of South America, that could be an issue going forward. So something worth watching. Again, that's a demand story. Right now the market's focusing on supply. The other thing, demand side, that happened this week or is presumed to have happened, is there's talk of 1 to 3 cargoes of soybean meal out of Argentina going into the east coast of the U.S. Meal prices in the east, soybean basis in the east continue to be fairly high, with some basis levels in the east reaching 40 to 50 over, where basis levels in the western Corn Belt are about option price. So you have like a 40 to 50 cent basis differential in soybeans, and it's been of that nature for quite some time. Movement, producer movement was massive late in June, early part of July, has now slowed again. Because of that, local corn basis has in many areas have perked up a little bit after seeing just a huge break during that rally in the corn market. We're still fighting river issues, namely on the Illinois River, which basically has been under force majeure the last week, and many locations in the Illinois River have not even loaded barges of any consequence over the last month plus. We'll see how much longer that lasts. Obviously, it's an issue of rainfall upstream. Carrying charges, corn, pretty good carrying charges from Sep to Dece and on into the new crop. We've seen carries widen slightly this week on the corn. Soybeans, a different animal to some degree. We have lost a tremendous amount of carry. In fact, I've went into an inversion on new crop spreads here over the last 2 to 3 weeks. Went from wide carries to actually in some cases inversions if you look at November beans against July, for example, and very small carries to the Jan and to the March. And considering the carry out we're presumably going to have this upcoming year of 425 million bushel, that is a little confusing. Even if carry out diminishes, history would say anytime carry out's over 200 million bushels, you tend to have good carries in the bean market, and you do not have inversion, so that spread needs to be closely watched. As I mentioned earlier, outside markets, energy's back down near $50. Dollar has had the U.S. dollar index has had a pretty good run here of late, based on rhetoric out of the Fed about maybe eventually increasing interest rates. The Greece situation kind of dying down, and also the Iranian situation. So all in all, outside markets continue to back off. Actually, the U.S. gold, or excuse me, the gold, I think is at 2 or 3 year lows right now. With that, in the week going forward, as will be talked about in the following week and the following week, weather and perception of crop will be the main factor going forward. Please keep in mind, if you're a producer, look for these levels to make pattern sales. As in typical weather markets, none of us know when the high is in or when the weather's going to peak until it's too late. So make smart, calculated sales when you have the opportunity or protection. If you have any questions, feel free to call us here in the office in Cedar Rapids. Phone number is 800-373-2525, or catch us on the web at BIS Commodities.com. With that, everyone, have a great weekend.